I'm Alan Kinney, Editorial Director with REIT.com, and I'm in Chicago for REITWeek 2013, NAREIT's Investor Forum. Joining me is Gil Menna, partner with Goodwin Procter. Gil, we last spoke about 6 months ago. You told me you thought that the potential for more REIT IPOs was pretty limited. Do you still hold that opinion?
Yes, limited as a relative word. Obviously, we've seen activity in the single-family rental home market, and we can talk a little bit about that in a second. But broadly speaking, I think limited in the context of prior years. My sense is that maybe perhaps Brixmor will be coming out to the markets. Archstone obviously was sold and didn't go out to the public markets. So with the exception of the American homes for rent single-family market, I would say that there's not going to be likely a lot of activity. In that space, Silver Bay and American Residential are trading at 52-week lows, so Colony pulled back its offering. It's always good for markets time out, see what happens. I think that there's still a lot of traction in that sector. There's a lot of debate about whether or not that sector has long-term legs in the REIT industry, but I think with Wayne Hughes' offering coming out in the market, it's likely to be an interesting summer in terms of seeing how that sector plays out.
How about private portfolios coming public?
So same concept, right? Private portfolios, you really need a platform. Brixmor, for example, has a platform. Archstone had a platform. Obviously, some of the single-family residential property companies obviously have strong platforms. Some of them are externally advised. American Homes for Rent is not. If you take a look at some of Blackstone's portfolios, for example, on the office side, the question is what management team would be around that portfolio to effect a successful initial public offering. And I think that there's more likely to be trades into the existing public market, or possibly even foreign capital coming into the U.S., which was significant last year, than seeing those portfolios without a significant platform sort of bolted onto some platform and then taken public. I think that the market might be a little bit too wise for that, and there needs to be some traction and some history associated with the operation of those portfolios before they can access the public equity markets.
And I know that your firm represented MAA in its recent deal with Colonial. Can you give us an idea, kind of maybe what this means for the market going forward?
It was a unique transaction, exciting transaction for MAA, and a logical combination transaction in the multifamily sector. The multifamily sector has seen a lot of activity recently, obviously. I don't think that the MAA Colonial transaction necessarily bodes for significant, or suggests that there will be a significant activity in the REIT M&A space. At the NYU conference, a handful of us were sitting around the table wondering whether or not there were going to be 1, 2, 3 major business combinations in the sector this year, and people were, all over the map on that question. I think that there are still logical combinations, but they're few and far between. I think you're more likely to see M&A in the context of what we just talked about, where you'll see existing seasoned REITs that are able to access the public equity markets, buying large portfolios, some of which might have been taken private prior to the financial crisis.
All right, well, Gil, thank you so much for your time.
Thank you, Alan.
And for more on this and other REIT news and analysis from REITweek 2013, be sure to check out REIT.com.